Okay, everybody, I just wanted to go ahead and catch us up to where we're at. I apologize for the delay in our updates, but holidays hit, and then I was working on some business things, and now I am straight. So I'll start continuing my weekly rate updates. But really, what's been happening, especially since December 13th, that was where we really had the breakout. And you heard a lot of the Fed talking about, hey, maybe we reached the bottom. Maybe we're actually going to start doing rate cuts in 2024. So the market responded. Everybody's thinking, oh, great, rates are going to get better. Life is grand. And then throughout this period of time, of course, we hit the holidays and we've had a lot of kind of backpedaling about what's exactly going to happen. I mean, everybody thinks that, hey, rates are going to go down in 2024. When are they going to happen? How many rate cuts, 3 or 4? They don't really know. But after the Fed came out really kind of dovish, then they started to walk it back and they're trying to go, whoa, hold on. Maybe we're not ready to do anything yet. And then economic data comes in and there's still a lot of conflicting data that's hitting, lagging data. They're trying to hit that 2% inflation rate, but from an average year over year, it continues to decrease. So you've got these decreasing numbers that are making everybody think, hey, life is getting better for the economy. Maybe we'll have that mythical soft landing that everybody said couldn't happen, and then that will end up in a recession. It's really difficult to say how all this is going to play out, but what you've seen is kind of like a hard stop right here, where we're in this really tight trading range, and no matter what, and there's been some economic news that maybe we should have had a bigger negative impact, but everybody kind of knows that the data is kind of jacked right now, so they're all kind of waiting to see what's going on. Plus you have holiday data, where a lot of spending in there, so when it shows that there's huge consumer spending, well, yeah, it was the holidays. So what we're seeing now is it's just kind of in this really tight trading range, and it's not really going to go anywhere until something significant happens. What is that going to be? Who knows? All right. At some point in time, maybe there'll be confirmation that yes, indeed, we are going to maybe get in a soft landing and, things are going to get better, and then rates will get better, or maybe they'll announce a cut, or maybe the opposite. Maybe, like one of the issues come around in this is that they're saying that housing prices have increased, shelter costs, which is a big part of the inflation meter. So it had a negative impact on it, but it didn't like race anywhere. It's just hanging out in this trading range. So we're probably going to go back up. It'll break up and down, and then all these moving averages will, become stronger. And that's kind of where we're at. So we're in a holding pattern. So do we have like amazing rates right now? Not necessarily, but they're a lot better than they were. So if we look at a year, you can see what happened. We were on a steady decline, and then this is the first time we actually came up, and now we're in this trading range in here. So you can see how it's been coming down. So it's making it look a little, dangerous. We got, what's a double top? I mean, yeah, we could go down. We just don't know. So anybody predicting what the rates are going to do really doesn't know what they're talking about, because nobody really knows. There are too many economic factors that are going to go into this. If we get a bigger perspective over 2 years, we can see where we are here. We're back into kind of this trading range where we were for a good portion of time at the beginning of 2023 and the end of 2022. So the idea is that things are hopeful. There's a really strong point of resistance up here. We still have room to get there, but we're nowhere up in these areas at all. So we're not going to have some race to super lower rates, but at some point in time, they're going to make a decision, and more than likely, all the pundits are saying that they're going to reduce rates. And I think that they're going to have to anyway, simply because you can't maintain the economy the way it is with the rates aside. There is a massive amount of people who are living on credit card debt, and that is going to take its toll. People are going to start to do the cash out. They already are. 30% of the loans out there are cash out refinances, where they're actually tapping into the equity to lower their monthly payments, which is actually a really good strategy. But we're going to be losing those 2 and 3% interest rates, which is also going to loosen up some of those people that didn't want to move. So they're less or more likely to sell their home. So I think we're reaching a point of equilibrium, and then we're going to have a breaking point, and then we're going to start seeing a massive change in the market. So we'll start taking a closer look from week to week like I was before, and we'll keep informed, and we'll have a good sense when it's either going to break one way or the other. All right. Hope you have a wonderful weekend. And until next time, have a great day.